How are you, man?
Good. How are yourself?
Good, good. Is this where you say, I told you, Mario, I told you the war is not over?
Don't know yet.
Yeah, you saw the strike, yeah?
Yeah.
Obviously.
Of course, it's on a
So, what,
Friday night.
of course, exactly. I literally, the title of this is like, the US bombs Iran as soon as markets close.
It seemed like
I
it was
should, I,
time for it.
the producer should probably put the thumbnail. Surprise, surprise.
Yeah.
Um, Where do we start? Let's before we get into the strike, I want to get your thoughts because I enjoyed our conversations because you look at things from an economic lens, and I remember we agreed together about the importance of China and all this in the bigger picture. We discussed this, I think, in our first interview since the war started. And you've always been concerned that the war is not over because the US has not achieved its objective from capturing the Strait of Hormuz. In one of my interviews today, it's a recorded one, not live. So anyone listening it's not live yet. But in one of my recordings, I spoke to executives from a rare earth company, I think a Canadian or American rare earth company. And they broke down how significant that risk is on the US national security that China controls rare earth minerals. They're refining. So kind of confirms the argument that the US needs some leverage over China. It's becoming extremely important. All rare earth companies, except the one I spoke with, I think they're called Realloys. They're the only company that doesn't use any chemicals or equipment from China for the refining. They told me that, I couldn't believe it. All other rare earth companies outside of China use either Chinese chemicals or equipment and parts. And so it just shows how strong that dependence is. Now, my question to you is, oil prices have plummeted faster than what most of my guests were telling me. A lot of it comes down to China. No one could really explain to me why China did this and what they did exactly. So that's what the kind of the black box is right now. So maybe your first question is starting there. The oil prices, like what the hell happened?
Well, the market is thinking that there's a positive off ramp here. And yes, the Chinese absolutely helped oil prices by not buying every barrel that they possibly could have. What we don't know from the Chinese perspective is how much of their strategic reserves actually got used. And it's a fair bet that it's probably quite a lot. So the Chinese also have a lot of leverage on oil prices moving forward and how quickly they want to respond and refill all those reserves. But that's China. I think the overriding message from the oil market is that this was not as catastrophically bad as some people had expected. And therefore, it isn't looking like there's going to be some lingering long run, $100 per barrel oil into next year. Now, that doesn't mean that oil prices aren't going to bounce here in the short run, because there's going to be some kind of, first of all, we talked about this many times before, that the uncertainty over how the Iran conflict will actually end up, because we're not even close to the end here yet. I mean, we might be in the middle stages of it because, the negotiations, everything is going on, but we really don't have any idea what the final outcome is going to be. So the oil market has taken sort of a optimistic take on it, in part because of what the Chinese have done. So we're sitting here with a ton of unknowns. And in the oil market right now, unknowns means you want to sell. You don't want to be long oil. You want to be selling oil because, there's that threat of, once this thing is over with, oil goes back into the $50, if not less, $50 range or not less. So that's where the path of least resistance is for crude oil.
So where's your stance now on whether the war is finished or not?
Oh, we have I don't even think we should comment on it, really, because we have no idea. They gave themselves a 60-day memorandum of understanding to hammer out all the details. And I honestly think that we'll know something maybe on day 58 or 59. We have no idea how close they are. I mean, both sides are going to mug for the cameras. Each side's going to say, I got this, I got that. The Americans surrender. The American administration is going to say, we got them we got them on their knees. And we don't really have any idea what the details are and what actually is being discussed. Not only what's being discussed, but what is actually realistic. What is the final agreement actually going to look like? We still don't know what kind of demands are being made back and forth in those details. So, I think we just need to reserve judgment until we get closer to the end here. And it's not really a surprise that the conflict has kind of flared up a little bit, because you knew the Iranians were going to test the American resolve. There was going to be that kind of it kind of, pushing the envelope into the gray area and ambiguity to see what would happen. I mean, that's just natural fog of war type of stuff in these types of situations anyway. So you got to reserve judgment. And we've talked about this, Mario. This thing is complex. There are a lot of different angles to it. And there's a lot of different perspectives that need to be hammered out and taken account of, not the least of which is what happens with Hormuz. And I don't think I've heard a unifying narrative from either side. What exactly they expect to happen going forward. So, I mean, we have no idea what's happening here.
There's one of my guests was telling me yesterday, actually, that he's worried about how fast he's an Iranian, and he's supportive of the Iranian government, and he's worried about how fast oil prices have fallen because it gives more breathing space for Trump. And now today I'm thinking, like, is that why Trump was emboldened to not only retaliate against the strike yesterday by Iran, but retaliate in a strong way, striking the Iranian mainland for the first time since the MOU? How fast can oil prices spike? Would it take a lot? How much supply is out there? I'm not sure if you're following it closely. And, are we out of the woods, or things could just turn around very quickly if Iran decides to close the Strait of Hormuz?
Yeah, that would be bad. But I think, what you said is exactly right. There is a bit more margin for error here. Because again, the balance of opinion in the oil market has shifted favorable. Now, there's a couple reasons that could be, and one of them is not good. It could be that demand has fallen off faster than people expected. And so it's not necessarily the market is pricing supply normalization. It's actually pricing demand destruction. And there are a couple of confirming and corroborating signals that suggest that could be the case. And if so, that would be a huge variable. And, the U.S. strikes Iran, which, reignites the supply fears. But if demand has fallen off sharply, then oil prices aren't actually the biggest thing to be concerned about. And they won't actually rise all that much. But again, we don't really know if this is if say this is just a one-off. I don't think you'll see much reaction on Monday. If Monday morning, or Asian trading starts on Sunday night, Monday morning Asian time, and if this is all that there is, I don't think you'll see a whole lot of reaction in the marketplace. Maybe you'll get a couple dollars per barrel in some of the major global benchmarks, but if nothing else, if there's no further escalation, I think the market has priced in enough margin to say, look, we know this is uncertain. We know there's a lot of moving pieces here. Unless this is a full-blown restart of the conflict, or the Iranians come out and say we're gonna start charging tolls on shipping, or they make some more concrete moves to close off traffic. There has been enough movement in traffic to convince the marketplace that this is the balance of opinion has shifted more favorably. So yeah, with oil prices down.
What would it take? You've already hinted at a couple of things. What would it take for oil to go back above 100?
Yeah, it would have to be going back to the pre-memorandum of understanding state of affairs. And to get even higher than $100 per barrel, I think you're going to need to go back to the pre-ceasefire conditions where, we're actually talking about the U.S. and Iran and U.S. and Israel actively bombing Iranians, or the Iranian mainland all over the place again. That would be $100 plus per barrel oil. But short of that, again, I think there's the other part of it that you need to consider is the demand side of it, and that may be where the attention is quickly refocusing.
Were you surprised at how fast oil prices plummeted?
Not necessarily. I was actually, the downside was, markets love momentum, especially in something like oil futures where there's lots of leverage. So, there was always going to be a tremendous downdraft. I mean, Trump kept saying it, and he was right. So as soon as we're done with this thing, oil prices are going to plunge. That was always going to be the case. What I was looking for was where there would be a short-term bottom and then maybe a bounce in oil prices as the marketplace started to really reassess where the situation is politically, but also where the situation was as far as oil supply restoration, tanker traffic, how much supply and production had been damaged and taken offline, how quickly we get back to normalization. So I'm still looking for a bounce, whether it's driven by a geopolitical premium that comes back in the marketplace or whether it's driven by reassessment of where the situation is. I still think you'll get a bounce in oil prices at some point. But the initial downdraft was all about pure momentum. Anybody who's leveraged long, just covering their positions, getting out, lots of leverage speculators going in and shorting the marketplace because that seemed to make a whole lot of sense. But after you get the initial downdraft, that's where you start to get more of an informational signal from oil prices.
Jeffrey Curry today was telling me something. He had a question he wasn't asking me, but he was a question he's been thinking about. He can't know the answer. If he can't figure it out, I'm sure I can't. He's like, Mario, what I don't understand is the demand destruction on the Chinese side. Why are they still not buying up oil? If they did use their reserves, oil prices are low. Why are they not, first not using their strategic reserves anymore? We're seeing a pickup in imports on the Chinese side. And he's worried there's some agreement, maybe even between him and Trump, Xi Jinping and Trump, to keep prices low. Do you think it's a possibility?
I think that's one of the, I mean, you look at a couple of different possibilities. That's right at the top of the list. That's the first thing I thought about. Is like, why aren't they?
Okay.
Because I mean, look, we talked about this a couple of times ago when I last visited you. What happened at that summit? We don't know. Nobody ever said anything. Nothing ever came out of the summit. There was, the usual press release stuff and, feel good stories here and there, some memorandum about, investigating investment, but nothing substantial came out of the summit that we know of. And so to me, that was sort of like, okay, the point of the summit wasn't for the public. The point of the summit was so that Trump and Xi and all the, staffing people and the high level staffers can get together and start, talking with each other in various different ways. So if that's the case, and I don't think that you should discount that possibility at all. The other question on the other side of this, what did Trump give Xi? Because, Xi's a pretty shrewd negotiator himself. You don't want to underestimate the Chinese or the Chinese leader. So if Xi is saying, okay, we'll back off oil prices to give you a little bit of a hand here, President Trump, what did Trump give the Chinese? That's, I think, another major question to it. But that is certainly a big possibility. The other possibility is that just the Chinese are waiting for lower oil prices. They understand the economics of the situation very well.
Pretty low already. Like, it would be the wise thing to first stop using your strategic reserves, but more importantly, I'm sure they stopped. Just start buying up oil. Like
I said, if demand destruction plus normalization of supply, you're not looking at $70 per barrel. You're looking at $50 per barrel, and that's a substantial difference. And the Chinese were doing that. I mean, look, when were they refilling?
Say that again. What would they be without Chinese suppression? Without Chinese demand destruction? What would the price of oil be?
Much higher, much higher. But the point, I mean, look at what the Chinese were doing last year. They waited until oil prices were down into the $60 range before they started really filling their strategic reserves in 2025. It was almost as if they were preparing for what's happening now, like the Iran conflict. I mean, you look at some of the statistics where it relates to what they had done with the strategic reserves and all. It's almost as if they knew this was coming. I mean, look, they have the intelligence service, and I'm not sure, the Trump administration in Israel haven't exactly been shy about what they're going to do. So maybe China was just refilling the reserves or topping up the reserves, anticipating what was the likeliest outcome with Iran. But either way, the Chinese were patient in adding to their reserves, waiting for prices to go down to almost the absolute bottom. So it would not be surprising to me at all if that's what they're doing here, because they probably have more than enough reserves with the level of demand destruction that's taken place. That's taken a lot of the marginal flow out of the oil, the marginal bite out of oil prices in China. It wouldn't be surprising if that's the other explanation to it, or maybe even the main explanation. They're just waiting for oil prices to get back into the $50 range, either expecting nothing further to happen in Iran, or just looking at the macroeconomics and the economics of oil and saying that's the likeliest outcome. If you got $50 per barrel oil in the future, why not wait? If you don't have to buy oil at 70, why not wait for 50?
Or Trump gave Xi something. Because Trump needed low oil prices more than Xi.
Yeah, he promised not to do something else. Maybe lay off of Cuba for a while. We could speculate, and it wouldn't really. I mean, it would just be naked speculation. But that is.
I'm not going to speculate anything. Taiwan. I'm not going. I won't speculate.
That's going too far.
Uncharted territory. Well, then again, he did freeze. He didn't give up Taiwan. He's not going to give up Taiwan. It'll take a lot more.
No, I think that's that's going to be a major sticking point on their side. Yeah.
He did freeze the arms sale, though.
Yeah. So there's either a grand bargain or grand economics from China.
Grand conspiracy.
It's never a conspiracy. We know that this stuff takes place. It's not a conspiracy. It's reality. The portfolio that performs in one economic regime can get crushed in the next. So in this free webinar, we're going to reveal what those 4 economic regimes are, how to identify them, as well as the assets, historically speaking, best positioned to perform in every environment. So reserve your seat now and learn how to prepare your portfolio before the economy shifts again.